Hey guys, just making a quick video for you about something quite important. Basically, it's bad news. I think the stock market has fooled everyone. Now let me explain to you what I mean by that. Basically, after I posted my recent video, and actually over the last few weeks, I've come to a conclusion which may be hard to accept for many of you watching this video, but I think it's the truth, which is that I think the stock market has managed to fool everyone, almost everyone, into thinking in a specific way, which I'll explain to you in this video. And then I'll explain to you what I think we can do about all this. Okay, so first of all, I think it's important to begin in this way. One of my favorite philosophers, I would say one of the greatest minds of the 20th century, was a French philosopher by the name of Michel Foucault. And one of Foucault's most interesting ideas is the idea of the episteme. Essentially, what Foucault argued is that throughout long periods of time, the episteme, in other words, the system of thinking, the mode of thinking of humanity, of civilization, changes. So the way people think, and in other words, the mode of thinking, the system of thinking changes throughout time, throughout long periods of years. So that means whatever the mode or system of thinking there is today, the episteme will change again in the future and again and again. And if we apply this idea to the markets, which I'm going to do right now, this essentially means, as you can see here, so this is just an example, just a diagram I want to show to you. And in a bull market, in a raging bull market, where the market just keeps pushing higher and higher, the episteme, in other words, the mode of thinking of most people is, as you can see here, people will say, and you will see this in social media, you will see this in the newspapers and the media everywhere. So the way people think is, price cannot go down, can never go down because of fundamentals, schmundamentals. And this just is very much entrenched, becomes very dominant in a bull market. People will say, oh, price cannot go down because of fundamentals. By the way, when the price crashes and goes into a bear market, then you have a different episteme. The episteme of optimism, which was mostly here in a bull market, that changes, completely changes into an episteme of pessimism, extreme pessimism, where people will say, well, price can never go back up again. Because of what? Because of fundamentals. Okay. In other words, guys, people will use fundamentals to justify why price cannot go down and why price cannot go back up. We saw this with Tesla this year, if you remember. So with Tesla, when Tesla was at its highs back last year in 2024, people would say, well, Tesla price can never go down because of Elon Musk, because he's such a genius. And by the way, when the price of Tesla crashed in the spring of this year, what happened? The same people would say, well, the price of Tesla cannot go back up again because Elon Musk does not know what he's doing. And that, by the way, was when exactly Tesla price bottomed and rallied higher. Guys, so the bottom line is, this is very interesting. It's very important to appreciate how the episteme, the mode of thinking of people changes in different market environments. And by the way, the reason I'm telling you this is because having read the comments on social media on my last video, and generally from speaking to other people, it has come to my realization that the majority of people out there, okay, most people out there honestly do not think that there's going to be any kind of a drop in the stock market. In other words, guys, in the opinion of most people out there, it seems that they just think the market will go up forever. By the way, in case you don't believe me, let me just read you some of the comments I read in the last video I posted. So here's one comment here. I am more afraid of the market crashing up than crashing down. And by the way, I'm not showing these comments to make fun of people. Not at all. I just want to show you what kind of sentiment, what kind of episteme we're dealing with. Let me show another one. This comment over here says, ES futures, S&P futures, going to 7,500 by year end. Okay, just think about that. Not 7,000. No. 7,500 by the end of the year. We have only about a few weeks left to the end of the year. So that means another 10% in just a matter of a few weeks. Here's another one. I think the absolute top is around 7,600, 7,700. Again, everybody is just calling the price higher and higher again. All right. So nobody's even thinking about 7,000 anymore. Forget that. Everything is about now 7,600, 7,700, things like that. Here's one. Around 7,600 to retest it. Another one here. S&P 500, 10K, then crash. So just to understand that, forget 7,000, forget 7,500, 10,000, 10K on the S&P before the next crash. I mean, this is just incredible. I wasn't even prepared for this when I was reading the comments. By the way, this comment over here essentially saying the power of artificial intelligence and technology is such a powerful macro force that it cancels recessionary patterns and keeps stock market indices in a bull market phase. In other words, guys, this comment is saying that the market cannot possibly go down or collapse because of artificial intelligence. But this is the exact kind of argument people would make, if you remember, 25 years ago in the dot-com bubble. In the dot-com bubble of the 2000s, people would say that the stock market cannot possibly go down or crash because of the internet, the age of the internet. But as we know, the stock market topped and then crashed by 50% over the next few years, despite the new technology of the internet. By the way, I think the reason why a lot of people are so incredibly bullish on the stock market right now, and they don't expect any kind of a drop in the market, in other words, people's brains have been conditioned to think that the market cannot possibly drop by a big amount, by even double-digit percentages. I think the reason is that over the last several months, every particular drop, every pullback so far has been extremely shallow. So I don't blame these people, okay? So if you look, since the April lows, pretty much this rally, if you look at all these pullbacks, the majority of these pullbacks being so shallow, so stingy, as you can see here. Again, very small relative to previous drops. And by the way, this is extremely unusual. In the year 2020, for example, despite the big rally we had that year, there was still big drops, about 10% in that year. So what we're seeing here, with these pullbacks being extremely shallow, is highly unusual. So that means, guys, most people's brains are being conditioned right now to think that there cannot possibly be a big drop in the market, that the drops are going to be very small, and we're just going to continue going up higher and higher. And that's why you're seeing a lot of these comments out there saying 7,500, 7,600 by the year end. And by the way, let me just make it very clear. I'm not saying that we're going to fall into a bear market this year. Okay, so I'm not saying the stock market is going to drop by 20% by the end of December. That's not what I'm saying at all. Actually, longer term, I think over the long term, the next 6 to 12 months, it is perfectly possible and probable for the market to move higher to those levels that were mentioned in those comments. So I'm not saying that cannot happen in the long term, but in the short term, in other words, the next several weeks, as we go towards the end of the year, going into January, I think there's much more risk, and I think we should be very cautious in the short term. So even though in the longer term, perhaps next year, perhaps by the middle of next year, we could move to those upper targets, nevertheless, in the near term, in the short term, I'm remaining very cautious here. And I think there's much more risk in the market. And one reason I'm very cautious right now is because the episteme at the moment is just extreme optimism, where everyone thinks the market cannot possibly drop by, let's say, 7 to 10% and will just go up forever. And that's what keeps me cautious at the moment. And by the way, guys, just in case you wanted more proof, take a look at this. The sentiment among money managers. So money managers out there, okay, also known as the dumb money, the sentiment among them went over 100. So the levels of optimism, the levels of extreme optimism, I showed this chart, by the way, to our members. The levels of extreme optimism among money managers went over 100. And typically in the past, when this has occurred, it has been a warning sign. It has been a warning sign of a potential major correction or a drop. Again, I want to make this very clear. I'm not saying that the stock market is going to drop into a bear market and crash by 20%. That is not at all what I'm saying. All I'm simply saying is that the risk is very high of some kind of a sharp potential drop in the stock market. And that drop in the stock market could potentially be about 7 to 10% in double digits, for example. I think anybody out there who says that there's too much fear in the market right now, honestly does not know what they're talking about. The sentiment readings and everything I've shown so far shows the exact opposite, that we're seeing extreme optimism and greed. And one last thing I want to show you here. Get this. As I'm sure you probably heard, Michael Burry, who, as I'm sure you know, one of the biggest bears out there. Michael Burry, of course, made his name in The Big Short, if you've seen that film. Now, Michael Burry, again, one of the biggest bears out there, he just recently closed his hedge fund. Essentially, he gave up. Now, some of you probably know this, that usually when some of the extreme bears out there, when they give up and they throw in the towel and they say, forget it, that's usually about the time when we usually see a major shift or turning point in the market. Now, some of you are probably thinking, well, is it not possible for the stock market, the S&P, for example, to make a higher high to 7,000? Yes, it is possible. The market could, for example, ignore all these warnings and push yet again to a new high to, for example, 7,000. But here's the thing. That does not change anything about what I've said in this video. It makes the risk of a big drop or a correction of double-digit percentages even higher. So I don't think the risk disappears just because the market goes to, for example, 7,000, if that happens, by the way. Again, I personally think there's much more risk in this market right now, so I'm being very cautious. By the way, I'm not suggesting to anybody that they should sell or short the stock market, not at all. This video is purely for educational purposes. I just want to put this out there and share with you my thoughts and why I think people's brains right now have just been conditioned to think that this market cannot possibly drop. And personally, I think if we do see some kind of correction or a drop in the stock market in the next several weeks, whether by the end of this year or going into January, I actually think that would be a good thing for the market, because I think we need to shake out the weak hands and also just change and shift the sentiment, the episteme in the market right now. Anyway, guys, let me know in the comments what you think. I'll be interested to hear your views. And by the way, guys, don't forget that myself and Charlie Burton are doing an online educational course on trading and technical analysis. And to get the early bird discount, just go to this link you see here, which is also in the description. Okay, thank you very much indeed. See you guys in the next video update. Cheers.